Okay, I think you can share your screen too.
Okay. Guys, you have to forgive today's internet. It's a big mess, but it's what you have to deal with as a trader. Rick, why have you made my image look very funny? Making my head look long.
Your image is not funny. Now let me see. Okay, this is better, right?
Take it like that. Anyway, I'm sharing the screen. Can you check it? Okay. So where were we, guys? Where were we? I think I was diving in on telling you about how you don't play with chat patterns. You know, they are like the founding fathers of technical analysis in the markets. Like patterns. After before your moving averages, before your trend line, before your other blocks, before your change of character, before your liquidity, there was chart patterns, and there will always be chart patterns. So, like I said, the resultant effects vary. You'd have some patterns um, play out on the 5 minutes, and then the implication will just happen briefly on the 5 minutes. You have some patterns play out on the 1 hour. The implications will show off on the 1 hour. So when you have a daily pattern, then you know that you're expecting something huge coming in, right? So keeping that in mind, similar thing to what you're seeing on the daily here, then I saw it on the 4 hour yesterday. Do you see here? Right? I saw that on the 4 hour yesterday. So went up, came down, bounced off, came back down into the range, bounced off and came back. And that was whole of last week until the market opened. And then these two candles, right, was a very good avenue for me to like relax and bank on what was going to happen next. And quite remember that we did take our first attempt of a trade, exactly where this line is, right? But I got it wrong with our stops because you know how gold can be very like volatile. And then if you're trading and you're always concerned about risk management, then even though you know the right place to put your stops, then you're tempted to like even reduce it. Because if you're looking at a setup like this, the clear way to put your stops is two. First here, and if you want to be extremely conservative, then you want to put it here, So you see that you have like here being what? Right beneath this price range, right, which was like the low of that midday, and then here being literally the low of the week, you know. So the other one was low of the day. This price here was low of the day, right? And then here being low of the week because the week had just begun anyway. And normally, if you're taking a trade and you want to be, let's say you're going long or you're going short, right? The best place you want to put your stops is looking at the structural low of the day, So instead of putting our stops here, and that would have been 136 pips, which is pretty huge for gold, we decided to squeeze it in after a beautiful closure we saw here, right? Let me show you the closure here like this, right? And be like, okay, this looks like a good setup for gold, you know, to go up from here, right? But now you might think that the expectation is like, let's say we make like some 100 pips, 200 pips. No, the expectations was that we make huge pips, trying to squeeze in with a tiny bit of stops, you know. But guess what happened to us? Gold ran us through. And after it ran us through, I'm like, no, I know that this setup is going to play out because I'm not limited to like the 15 minutes. I'm watching things from the bigger picture. That's how come if you're following me from the community, you saw me going rampage with the comments and telling you guys that we're going to have the biggest trade of the day because I was very confident with what I was seeing on the bigger picture, you know. And so what happened, I had to like send you my full on swing setup, right? Which I still have it running here, and I'm going to keep it running like I told you for the rest of the week, you know, which is like to do things the right way, regardless of what the market setup or sentiment was going to be, and then put stop loss where stop loss needs to be, and have a huge potential upside of take profit, right? Which is me expecting take profit, my long-term take profit being 37.50, right? And once it becomes like this, right? Once it becomes like this, there is no worry about the stops anymore, right? Sometimes when people see something like this, they are so concerned about the semantics. The semantics being, but the stop loss is 200 pips. But if you're taking a stop loss of 200 pips and the take profit is 800 pips, that's still a risk to reward of what? A good one is to 4, isn't it? You know? So it doesn't matter at that point anymore. And then if you look at this setup, it's literally 1:5. So what's the name? Risking what? How many pips now here? 100 and what? Literally 200 pips for what will be the pip range in total for this? 1,000 pips. That's just what we're talking about. A 200 pip for a thousand pips. That's for a swing setup, right? Now let me give you the bias here. The bias here is that, or the key notes here in such a situation is that you must use a risk calculator. You know, you must use a risk calculator if you're following through things like this. You cannot use your emotions or your sentiment or your guesswork to set up a lot size anymore, you know, because if you normally take, let's say, one lot for the first SL that I was showing you, and that's like 50 pips. Then after loss, you're gonna run at $500. If you look at this, then you're going deep into $2,000. So it means that once you have a setup like this, the lot size must reduce from one lot to perhaps 0.4 or 0.3 thereabout. You know, and that is when it will accommodate to you still losing or risking the same amount in the market. You know, so I was like, no, I'm going to just, you know, forget about chasing that intraday small bit of movement and then go big. You know, go hard or go home right there, right? But see how it eventually unfolded, right? You had pushed up again when you think that it was the right moment. You just think like this was what happened. Guys, forgive my chat. Forgive my chat briefly. See, gold played us a lot here yesterday, right? It toyed with us a lot, and while it was doing that, right, I was happy. You know, I'll share one little secret with you generally, right? I'll share one little secret with you generally. Just a second. And that secret is that, right? And that secret is that if you have a point in time in the market where a zone is being respected heavily, right? But instead of price just blasting through it, right? Price does this, goes up, comes down again, goes back to the level, comes down again, and goes back to the level, right? You can see how many times, right? One, two, three, four, perhaps approaching the fifth time. Just know that it's it's really time and something huge is coming. You just have to know. You get what I mean? Because normally if price is gonna just bounce off from that level, you'd have it like happening on the third instance at most, or to stretch it all, fourth instance. But when it comes back there for the fifth instance, right? What it's doing is just scaring the weaklings out of the move. You know, let me give you this. Let me give you this again, contrarian logic that nobody will tell you. Nobody will tell you as a trader, right? And that contrarian logic is that the market at every point in time when a huge move is about to happen, doesn't want a lot of people to make money in that move. Whether you know it or not, that is the real fact. How many times have you seen a huge move happen in the market, but you just have just a handful of traders that were really able to catch on to onto that move? You know, you go on social media and then, yeah, today gold was trading at 400 pips, 500 pips, but it's just like three or four traders, except for those that are privileged to be in some of our communities, you know, that get to like ride on with us. Even those that get to ride on, some of them get shaken, right? Some of them get shaken out of the market. They just get you easily get shaken out. I don't know if you get what I mean. And that's because, like I said, take it from me, you're not going to hear it anywhere else again. The market doesn't want a lot of people to squeeze out the most out of it during those times, right? And it's a very hard thing to take. When you hear it for the first time, you're like, is it true? How? Why? But it's just what it is. You know, the market is not set up to make everybody a millionaire. In fact, it is actually set up to take money from the impatient and reward it to the patient. And this is not the first time you're hearing this, and you're not hearing this from me first. This statement, I think the first person that I probably ever heard it from, if he was the one that made it, was what's this Warren Buffett, right? Warren Buffett was the first person, if he was the one that made that statement. It was the first person I heard it from. The market is designed to take money from the impatient and reward it to the patient. Now let me give you a good perspective of that again. Here, right? Here, when in the morning, right? You know, me and Rick trade together, whether you know it or not. Yes, we do trade. You know, we wake up and do analysis behind the scenes, what you guys don't see on social media. We always like chit chatting and sharing, you know, insights, and then, you know, like, okay, I'm jumping on this trade. I'm not jumping in. What do you think about this setup? I mean, like, you know, the relationship already. I'm not the one to explain the relationship between me and Rick here. But where I'm getting to is that when we saw this setup in the morning, right, he was already very energized for a short position, because, you know, Rick has been zoned in so deep into the intraday market. And so sometimes, whether it's true or not, I kind of feel from a hindsight that he does not mostly even care about, you know, what is happening on the bigger picture as much anymore, even though occasionally it takes time to like skim through it. Rick, correct me if I'm wrong. You know, so when I saw that shot, I'm like, okay, we might enjoy that intraday movement, right? We might enjoy that brief intraday movement that will give us like the 60 pips, 70 pips. But I told him point blank that I was really not interested. I told him that I was really not interested in that short move, that small move, right? That's how come I ended up closing that position and telling the community members to close, because while it was looking like this and the short was looking nice and all of that, right? I was also still looking at it from this point here, right? What's happening with my chat? What's happening with my chat? Okay, good. I was still looking at it from this point here like this, right? And I knew that what this was gonna reward me. This was gonna reward me much better, right? This was gonna reward me much better than chasing that small move there. So I just decided to focus my day on catching that big move, right? So I was now watching them intertwined between the 15-minute and then the 4 hour, right? And that's like the best combo to watch the market, if I'll be honest with you. What happening with my internet again, guys? Dubai internet is disgracing me today. You know, I don't know what's happening with the internet. I wanted to share something with you. I wanted to share something with you guys. Just a second, I'm just checking one or two settings. Okay, good. So see, right, guys, if I'll be honest with you, right, see this. Let me link them. Let me link them even nicely. Is it date range and time? And then do I have to put this one also on intervals? Okay. Now let's stop this again. Okay, I need to change the time. I don't think I need time to be the same, because I'll keep this one at 15 minutes. So it's just particular settings that I'm looking for. Interval should also be the same. So this one should be 4 hour. Good. Good. So see, let's see if it works, right? Let's see if it works. Oh, it didn't work. Why didn't it work though? I think I need to do something. Rick, what must I do such that whatever? Anyway,
Yeah.
guys, I couldn't. I couldn't. What must I do such that you know, here I have like the 15-minute showing here, then I have like the 4 hour showing here. But when I use the time bar replay thing, when I cut the chat, I want the chat to also be cut on the 4 hour as well. I forgot that setting. It used to be here. It used to be here, but I can't find it anymore.
Oh.
Anyway, see, right, with what I'm showing you, what I wanted to share with you guys is that the best combination in the market is trading in these two perspectives, right? Watching the market from the 15-minute and at the same time from the 4-hour, right? This is like probably the biggest secret that anybody will share with you for free, you know. So let's start here again. You see this pattern right here, right? And then you see this pattern right here as well, right? Let's change this to slim one. And that's exactly what is shown here. You see, let me remove the one that I drew earlier. Right now, you see that everything I have here is the same thing that is there as well, right? Now, what I was sharing with you is that if I come here, I need to also show something. I need to also I do it on my bigger screen, guys. That's why I'm struggling to do it here. I don't do it on the on this. I'm using my laptop for the streaming. But all that I'm showing you, I do it on my bigger setup. So and I've already done that setup. So there's no way always going back and forth with it again. It's something I need to show you guys again. Okay, I think the scales. Crosshair. Okay, increase the crosshair. Make it maybe black. Okay. Let's increase crosshair here as well. Okay, so now you see what I wanted to show you. See, do you guys see the crosshair though? Or I should make it more thicker. Maybe let me make it more thicker, right? Because some people are very blind. Okay, and let's make this one also more thicker, right? And this is a masterclass that you're getting for free. Now see something. You see here, this is this candle right here. You see, do you see the crosshair sign showing? I should make the crosshair thick. I keep changing my mind. Let me make the crosshair like this so that everybody can follow. Good. Now see guys again. See. Do you see here? Right? Do you see here? That's that candle right there. Do you see? And do you see this candle right here? Right? The open and the closure. Right? That's how come it opened here, came down, and then went up to close, right? So it starts from here. You see where I just switched. That's where the candle is. Here. It starts from here. It starts from here, and then it ends here. It ends here. Do you see? Let me remove this one. That is for this bullish candle right here. Right? What I just showed you, the one that I've marked there, is for this bullish candle. It opened here, came down, and then went all the way back up there like that, right? Now look at the next candle as well. Right? Look at this next candle as well. Came down and then went back up as well, right? Do you know which candle that is? Who can tell me which candle that is? This candle right here, all the way to here. Is this wick, right? Is this wick right here? So in trading, right, you could actually be trading these candles in between on an intraday levels, right? Scalping them, trading them, making quick bucks while you're just like waiting for the big move to happen. You get what I mean? So now see something again, right? Now see, if you watch here on the lower time frame, right? Came down again, went back up, came down again, went back up, came down again, finally went back up. And then this closure right here. You see, after that, this candle broke out. This candle broke out of the range, right? Look at exactly where that candle broke out. Do you see? When I put the line there, do you see? Let me clear some of these lines so that you even see it clearer. Do you see where that candle broke out though? Do you see? Do you see from here? Or I should make it big. You guys see though? you know, and exactly where it broke out, right? If I come here now, is this. That is in fact, your the most perfect timing, right? To even go in the hardest. If you're always looking for a point to go aggressive on the market, big lot size, and then flip your account, and then you're wondering, how do you guys do that? What do you see? What do you do that I'm showing you the mechanism that allows us to do that. And it's all on precision and timing. You got to get all of it on precision and timing. You can't get it wrong with the precision and timing. Because 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 it all has to do with drawdown, right? It all has to do with the worst thing you want to happen to you. You're trying to go for the juggler. The worst thing you want to happen to you, right, is drawdown. The worst thing that you want to happen to you is drawdown, right? And it's gold we're talking about here. So if you don't get your timing, your precision right, you're going to be in a huge drawdown and you blow the account before the move happens. And that's how come these timing and these tactics and these maneuvering, you need to be doing it. You need to be checking. You need to be watching. Yesterday, I was literally seated here the whole freaking day. Ask Rick. It's so shocking that he can't hear me directly. But ask him yesterday, I was literally seated here. I told him that, Rick, I am not leaving this chair until I freaking milk the hell out of gold. I told him right there yesterday. And here, as you can see, I don't know if you guys can see, I don't know what it's showing. I have like a huge pile up position on gold still running. I'm holding, I'm holding for the longest of time. Oh, I couldn't show it properly. I couldn't show it properly. But anyway, look at this from here, right? Look at the 15-minute from here. Look at what happens from here. Guys, look at what happens from here. Right from there. You see? You see the next move? It takes off and doesn't look back, right? And then see the next subsequent move again, right? Now, from the point where I was telling you, do you see the drawdown? Literally non-existent. Literally non-existent, right? But remember that we are already in the position here, right? Within these ranges. We're already in the position within these ranges. But this place gives you the vote of confidence to add more position, then watch the market even take off the most again, right? After that pullback, right? Came back to break that range again, or more like precipitate the move for a much higher, potential upwards, and then finally we have it dying off for the rest of the day and then doing what it is doing this morning, right? Which is exactly what we have here now. So you kind of do all of this now. If you watch even this place, right, you can even break it down again. If you come to like the 2 hour time frame, you see exactly where I ended the line there. There was a reason why I put that line there. When I came to the 2 hour time frame, where did it hit? It hit exactly on the 2 hour closure, right? So once you've had like the market breakout of a range like this on an intraday and then 4 hour swing perspective, right? You've seen the levels of entry. First entry here, second you can go in here, third you can go in here, you know, and you continuously make profit. Today we took an intraday trade which is still playing around here, right? And I am kind of looking to flip some small capital on the side, maybe take some 10K to 40K, 50K, and I'm watching closely here, right? And there's something that I'm looking for, right? And I'm beginning to get those signs, especially in the next 48 minutes. When this 2 hour candle close, maybe I can come to the 1 hour, and then when this 1 hour candle closes, right? But I much prefer the 2 hour closure, right? Because we've had like this bullish, bearish, bullish again, and then this small one, this current small one will be very predominant to tell how healthy the market wants to maintain that bullish momentum for the rest of the day, So there you have it, Chef Kojo dishing out nuggets, wisdom for free. Rick, it's your time to take over now. Let's hear from you as well. Eric, let's hear from you.
Well, I actually do not have much to say this right now because I mean you've broken down everything. That was a spectacular. If you're an artist, I would say performance, but this is not a performance. This is the real deal. Anyway, and thank you very much for gracing our live session today and sharing your nuggets. Unfiltered, guys. If you don't know, this is like one of the most unfiltered live stuff he has ever dished out. It's not hiding anything, just giving you guys all the nooks and crannies. That's how you pronounce it, right? The nooks and crannies, all those nitty gritties. But I would like you to also touch on some fundamentals or macro perspectives, especially the interest rates that we are expecting this week. What do you have for us about it? The vibes. Let's go. Let's go.
Be serious. Anyway, when it comes to like the aspect of interest rates, in fact, fundamentals, there's just a lot for me to talk about fundamentally. Let me just maybe I'll like, bro, fundamental is a whole Discord. Like, I probably would not. I don't think that I've prepared my fundamental notes enough to do the most, but I try my best, right? I try my best just because I need to grab one thing. Just give me a second, guys.
Guys, subscribe to the channel. See the fire? Don't play. Don't play.
Give me a second, yeah. Oh, I found it. What I was
Yep,
looking for
all
is
the time. We're waiting for you, Top K.
what I'm looking for is literally right here. Let's see. Just give me a second, yeah. Bye-bye. Well, we go. Are you okay? You look at it. Bye. It's family time, guys. My family has been calling. They've not seen me. I'm literally in my office, you know. You didn't know it. Let me give you a little bit of tour around my office. This is where the cooking happens. All the cooking. Like I have like my desk around here, right? Show you. This is the whole setup you'll find in there. The long screen there, and then the iMac here, and then my library there, and then I have like a sofa. When I'm tired of sitting, I just go and chill there, and I have like my coffee table for breakfast and drinks in the afternoon. Yeah, basically. So I'm like kind of chilling. It's this beautiful office. Yeah, it's my man cave, you know. So when I come in, I normally would lock myself very early in the morning. I've been here from like 4 a.m. and it's currently like 10 a.m. in Dubai. And so my family have not seen me. They're just in there. But now that's not what we're talking about. What we are talking about is gold fundamental, right? Now that's probably the first time I'm gonna release as much information as possible, right? In fact, if you want to think about gold, right, and this, Rick, you're pushing me to the wall. Do I really want to do this? Hmm?
Go.
Do I really want to do this? I don't lie to you, because like what most people don't
I
realize
mean,
is that
if you want, you could just touch on a few things, and then we'll do like another live session proper for like fundamentals.
because right, listen to me from this angle, right, and then most people will understand. Like sometimes people think that you have to just know information by default, or you have to have information by default. No, we spend countless hours, countless days, countless weeks researching, digging, stressing it out to look for information, to make it make sense, to dissect it, to break it down, to make it also relatable, right? And kind of use it personally for our own benefit, and profit seeking, right? And occasionally on a platform like this, right? Occasionally on a platform like this, then we tend to dish out that information, right? And it's very valuable. Like it's an information that somebody needs to pay tens of thousands to acquire, right? But you come here and then you give it out, right? But when you reserve that little bit of premium one that you say, okay, at least for my people that are in my private communities, people that are really committing cash as a reward for my time and effort, to acquire that information that I used months, weeks, years to acquire, and dish it all out in one live stream like Rick is having now. People are still going to wake up and go on Twitter and social media and spit nonsense about, oh, he makes all his money from courses, he makes all his money from Signal, he makes all his... Bro, like, are you okay in the head? I don't want to say any vulgar word before YouTube ends the live, but you're not okay in the head to me at that point, because like, look at my notebook here, look at it here, right? Look at the amount of... I don't know if it's going to show clearly, I'm waiting for it to show. Like, look at the amount of research that I have to sit down and do and learn, right? I don't know, hopefully it's coming clearly. You know, look at the amount of information that I have to gather. you know, and learn and make it make sense on the chart. But then, like, somebody wants you to come on live stream and then put it all out and say, oh, if you're successful, then give it to us. If you said you've made this, why didn't you, the person, go and sit down and do that same research by yourself in the first place? So where I'm getting to is that it's sometimes annoying and painful, right? That it denies the good people, right? It denies the good people of good information or good knowledge like this. But you know what the problem? The problem is not the bad people in the mix. The problem also comes from the good people as well, right? Why does the problem come from the good people as well? Because they are always quiet in those instances, right? You go on social media and somebody's spewing utter nonsense, but you know that no, you know, my commitment for this person's time is to pay for or compensate for all the effort, all the research they did, all the knowledge. Look at the grand scheme of performance that I'm giving you here. That Rick is saying, did anybody pay me for it? No, I just jump on Rick's live. I'm making fun of him, right? I'm making fun of Rick. Then he says I should jump on the live, and I said, why not? Then I jumped on it, and here we are. And then I'm going on and on and on, and I've broken down technically how I took gold, showed you a few things, made sense. Everybody just saw the setup. It made so much sense, like a master class. Now he's stretching me to go on fundamentally, But you need to be the one to voice out to defend against those people that keep spoiling the opportunity for the rest of you. Anyway, if I keep on this, I might just not be motivated to share what I want to share. So I also try my best to share a bit, just a bit, right? So first thing that you must understand, because now we're talking about gold. Today's topic, we are breaking down, we are dissecting gold now. Someone said, could you, all you're saying is that, of course, like it couldn't be. Sometimes we are just quiet to let it slide and let people feel like they're having a failed day with what they say on social media and all. And you think that this, but no, like, bro, I made freaking bunch of money and I can choose to just zone out. How are you going to get that information then? Do you know how to even put the bits and pieces together? If I show you my laptop, if I share my laptop screen now, and then you see the sheer amount of information that I have there, you will be blown away. Just on gold, not on GBP USD, not on this, not on that, just on gold. Let me see, maybe I'll be daring enough to want to do that. I am not motivated, but let me just see. Hopefully I'm daring enough to do that. Let me see what I can share with you guys briefly, right? Briefly, before I continue what I want to do with you. Let me share with you, right? I'll share with you. Where is the live stream happening again? No, I don't want to share the entire screen. What I'm going to do, I'm going to open that folder. Rick, what can you see? Tell me what you can see, Rick.
I can't see your screen just yet.
Okay, but I've started sharing.
Okay, I can see behind the scenes though. Like a
Yeah, I'm
folder.
sure it will start. Yeah.
Gold cost.
Yeah.
Should I share that?
Yeah, share it. It should share. Also, it was not sharing.
Where was it? But it is now.
Okay. I can't see it yet. I'm just waiting, guys.
By the way, guys, we've hit TP1 on gold already.
Good. Now see this folder that is sharing here, right? See this folder
In
that is sharing
blues.
here. These are reports from big institutions and hedge funds, and investment banks, right? Look at this report here. This is from World Gold Council, right? And then this report here, um, let me see. Let me see what happens before I go on. Okay, good. And this report right here, right? Okay, this was from the World Gold Council. And then let's look at this as well, right? This one is from JP Morgan, right? And then that's their report on gold, right? Their report on just investment and gold, right? And this is where I have to sit down and read every line of information here to understand CPI, to understand interest rate, to understand geopolitics, to understand mergers and acquisitions, to understand gold demand, right? How much volume or tons of gold are Chinese importing. I mean, the Chinese central bank acquiring, the Indian market importing, Indian being the major consumer of gold, right? How much is the tech industries? Because most tech firms also have gold as part of their insulators, right? If you didn't know, the mobile phone you're having, there's gold in it, right? Your Apple phone, your Samsung phone, there is gold in it. There's like a lot of information that I have to just sit down here and then consume, right? From all of these reports, right? Look at another one here as well, right? This is also what gold market commentary. I have to sit down and read all of this. There's another one that I even wanted to show you. This one as well, right? This is what gold outlook, visual analysis of price and market trend. And then I have to sit down and watch this. Where is gold going? Why is it going that? What is it doing? Look at the sheer amount of information that you must always do, or that you must always consume to keep you on top of your game, guys. Look at what you must do, the amount of information you must consume to keep you on top of your game. Like, to know that, okay, I know what I'm talking about. I'm not just like bullshitting. Like, I am really onto it. Like, look at the metrics. Like, like you just see it and you think that, okay, this is just another, guy talking about this. No. And then there's another thing that I have to share with you here as well. Where is that? Where should that be? Can't seem to find it in this folder, but I probably not attempt going into the other folder, because there's definitely a lot that I don't want to like unravel here. But I was going to show you my private gold model, right? I was going to show you guys my private gold model, right? Which is an Excel sheet, right? Where I've just put together all the metrics that I know influence gold movement, right? And then that Excel sheet basically tracks like a lot of things, right? Some of the things that it tracks, I'll mention them to you here, right? So I have like three ways that I always look at gold, right? Or three dimensions of understanding gold, which is from the US macro drivers, right? And then when I talk about US macro drivers, I'm always monitoring like key things that's going to determine fundamentally where gold is going. We're talking about the Fed interest rate, right? Everybody knows interest rate. consumer price index, which is CPI, right? I watch it, even the XY, right? Now watch here, or the dollar index, right? The dollar index yesterday played a huge role in the confidence that I exerted in my gold position. But so many people didn't know that as well. Nobody was even asking that question. This was how the dollar index was looking yesterday, right? This was how the dollar index was looking yesterday. Look at how it was looking, right? Already it's been very bearish, like making lower high, lower lows, right? Break this structure, goes up, comes back, break this structure, goes up, comes down, break the structure, goes up, comes down, break the structure, goes up, and comes down. Now it's like here. I can see here, right? If you know anything, right, about what I do or what I preach all the time about consolidations and wick formations here, then you see that what 1 week run through, 2 week run through, 3 week run through, 4 week run through, 5 until the week ended, and then we came back again, right? This is a clear, plummet coming along. You know what a plummet is? Market just ready to like just sink deep down like that. And that was the same time that we're also looking for what? We're also looking for a buy on gold here. You see that I'm in sync with it here. The same place that I cut it is the same place that is here as well, right? The same place that I cut the XY is the same. Let me see if when I split the screen, it shows the same. It doesn't want to. I don't know why it doesn't want to today. But now you see here that the same place that I'm here is the same place that is here, right? Now see something. Play one, and let me see what happens here. You see? Are you observing? You see when there's huge DXY drop, then gold started picking up there again. Let's go for the second one again. Came back, consolidated, pulled back up. Then that was also gold pulling its head back up again. Let's see again. In fact, let me go 2 times, 3 times, 4 times. Then we have gold right there like that. So you can see that what, as much as the XY was selling off, then dollar index was selling off, then gold was going up. So there's a sheer inverse relationship between the dollar index and gold. And the dollar index, as you've seen, it has more potential. The dollar index, as you've seen, has more potential to go down, right? I am projecting dollar index to 96.50. And if I'm projecting dollar index to 96.50, it gives me a good reason to even expect gold to surpass 3,700, to even go as much as 3,800, which is like the ultimate price that most people, in fact, the predominant ultimate price that most people are looking for is 4,000. But I think that that's far-fetched for now, right? At the moment, that's like a little bit far-fetched. It doesn't mean that it can't happen, right? But it's quite a distance away from an intraday basis, right? So let's not get far ahead of ourselves. Look at where 3,700 and look at where 4,000 is, right? It's quite a distance. So I'd probably even use this opportunity to continuously mark up my chart 3750. In fact, I normally don't even break down the 50s anymore. 3,700, let me go to 3,800. Let me do 3750. Let's do 3650 as well, is fine. And then let's say 3,800. Then that'll be okay, right? Good. Now you see these metrics that I mentioned dollar index. You have dollar index here, right? One of the metrics that I check, right? Then I check what the Fed interest rate. Rick, you're talking about the interest rate. That was your main interest, right? The Fed interest rate, right? The Fed interest rate. Guess what? I have interest rate here as well. It's not going to show on the 4-hour, but it's going to show daily time frame, right?
Yeah.
If I zoom in, it's probably skewed all the way up, so I have to like come all the way down before you see that interest rate number. I have to keep scrolling and scrolling. Yes. but you see it here, right? I have interest rates on the daily here, right? And I'm always just watching it, right? So after you people are done with watching the interest rate announcement on Forex Factory and never visit it again, I'm here watching its implication on the chart and how it keeps moving week on week, right? Week on week, week on week, week on week, week on week, right? So the last time interest rate announcement was made, as you have it here, 30th July, right? 4.5, still maintained, right? Then I have CPI. I watch it as well, right? And this is CPI, Consumer Price Index. It's also here, right? 2.5. So I'm also watching the trend in Consumer Price Index, which is inflationary in nature, right? And the more you're having this point upwards, right? The more you're having this point upwards, and then the more you're having this also, where's the interest rate again? Points downwards, right? The more you're having this points downwards, and the more you're having that point upwards. And then the more you're having this as well, right, which is the dollar index, also points downwards, right? The more potential you have for gold to keep going what? Up. It's simple mathematics. It's as simple as that, right? The more you're having this show down, this show up, right? Why? Because dollar index is showing like the strength of the dollar as compared to other basket of currencies. So if the strength of the dollar is currently showing, we're still running a huge profit. Now, Rick, what's the current running profit that we have? If the dollar index is currently showing weakness, it means that dollar is weak as compared to other basket of currencies, which means that it's predominantly preferred to invest in other
90
economies.
pips for today.
It's predominantly interesting for people to invest in other economies than looking to holding investment in the US dollar, right now because it's measured against, there's a measure of the dollar index, right, against all these other currencies, and then they are weighted, right? It's actually weighted, right? If you watch how the dollar index is pegged against the other one. I have the weight somewhere. Okay, it's not right in this note, but it should be somewhere not so far off from here, right? And so once you understand that weighted, then you know that, okay, like once DXY is going down, we have you have gold in their reserve. But if we're talking about gold, then I think my internet is frozen again. If it's not